FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, let's go ahead and talk about levels. Alright, we're going to take a deep dive into levels guys, and I hope the goal is to be able to break down these levels so it's a lot easier for you to understand what makes up a level and how you can identify a level. All right, so let's not waste any time, guys. Let's just go ahead and jump right into it. All right, guys. So when we talk about levels, we're talking specifically about our strategy that we trade, right? So if you're following this channel, it's because you're trading. You're trying to find out how to trade in line with market makers, right? And if you're new to this video, you never heard what a market maker is, you don't know anything about it, go ahead and check the links in the video, or at the end of this video I'll put in some links to those specific videos, so that way you can learn what market makers are. But essentially, what the hardest part about this strategy, guys, is being able to identify the levels. Okay, and what do I mean by that? So if we take a look at a typical market, right, a typical market maker cycle, okay, which would go as something like this. We have our Asian range, and then basically price moves between that range, and then let's say it all of a sudden moves up, comes back up, retests, comes down, and comes back up, right? So this is a typical cycle, right? We have the Asian range here where it sets the initial high and low of the day, and then we have the false move up to make everybody buy, and then we have the accumulation phase of them accumulating contracts, comes back up to test a high, and then they drop for 3 levels. Okay, so level 1, 2, and then 3. All right, now what's the advantage of knowing what level you're on? Well, the advantage of knowing what level you're on is because it gives you an advantage of knowing what the potential next move is going to be, right? So if you know you're at level 1, which is here, okay, then you know that you're looking for a sell. You're not looking for buys, right? And so this can give you an edge in the market, because obviously you're not wanting to go against the market maker. You're wanting to trade in line with him. And that's the whole point of the strategy, is to be able to trade in line with market makers, so you're not trading against them. And this allows you to essentially produce high winning percentages on each trade, because you know what they're doing. Okay, now the hardest part about the strategy is trying to identify what level you're on. And the reason this is so hard is because, you know, market makers don't make it easy, right, for you to be able to identify what level they're on. All right, if it was easy, everybody would be a millionaire. There is no need for this video to be made. Okay, so that's the whole point, is that this is probably the hardest part of the strategy that you have to learn, and this is going to take time to learn. Okay, this video is going to show you, hopefully show you easier ways to be able to identify levels, but at the end of the day, guys, you have to do your due diligence and actually go back into the charts and practice identifying levels. Because just this video alone is not going to get you everything that you need. You need to put in your part as well, and you need to go back and start to do homework and start to help your eyes identify levels. And the only way you can do that is by going back into the charts and starting to identify levels. Okay, so in this particular example here, we have level 1, level 2, and then level 3, right? So what exactly is a level? What constitutes a level? All right, so let's just start from the very beginning here. Okay, so what is a level? Right, is basically a level, when you really think about it, all it is basically price moving back and forth between a certain range. Okay. And it's basically consolidation, right? In the market is what a level is. Okay. When price is moving between 2 points, okay, you're at a level. All right. Whether it be on a micro level or macro level. Okay, and what I mean by that is when you look at charts on a higher time frame, you're looking at the bigger picture of things. Okay, so whenever you're looking at it on a daily chart, you're going to see that, the levels are pretty big, right, on a daily chart. Okay, but when you zoom in and you go to a 4 hour, a 1 hour, or a 15-minute chart, within that one level that you're looking at, there are multiple levels or multiple cycles within it. Okay, so just know that that's out there if you're looking at it on a bigger time frame, like a daily, a weekly, or monthly chart, that there are levels on those charts, and those levels are on a macro view, on a bigger scale view, on an overall picture type of view. Okay, so the level, all it is basically consolidation between 2 points. Okay, now is it always going to look this pretty like this? Hell no. Come on, think about it. Why would a level look this beautiful every single time? It'd be too easy for you to see the level. Okay? So no, the level is not going to look like this every single time. But I just need you to understand the concept of what a level is. Okay? All they're doing with this level is they're just accumulating contracts. Okay? Because they cannot move to a lower level until they accumulate enough contracts for them to do so. Okay? Because they can't sell to this level down here unless they have enough buyers coming into the market to take the opposite side of the trade. All right? So without that opposite side of the trade, they can't do this. All right? So they need to accumulate contracts. Once they have enough contracts and the contracts that they need to move down to the next level, then they will move down to the next level. Okay? But until they get those contracts, they're not going to go to that next level that they need to go to. They're going to keep continuing to collect contracts. Okay? So just keep that in mind. They're going to continue to collect contracts as long as they need to before they move to the next level. Once they have the contracts that they need, they will go ahead and execute, the trade down to the next level. Okay? How do they get people to buy in this market here whenever they're trying to sell? Well, that's when this happens here. That's when you have these false moves that happens, because they have to convince you, right, to buy. Okay? When they're really just trying to sell. But they have to convince you. How are they going to convince you? They go up 25 to 50 pips, okay, on an aggressive move, right? Because all the books tell you, oh, that's acceleration, that's the volume that's going into the market right now. You need to buy, right? As soon as you buy, they consolidate more contracts, go back up to retest it, because everybody and their mother, based on all the other books that they've read, they're thinking that this is the move that's going to happen. Like this, right? And it's not. Okay? And that's not the move. All right, so very important that you understand how that works. All right, so a level, all it is, consolidation until they're ready to move to the next level. Okay? How do you determine when the level is broken and a new level is created? Okay? That's going to be the major difference here. So what happens is, after the level is done, they have enough contracts and they want to move to the next level. Well, obviously you're going to see a point where it breaks that level. That structure is broken. When that structure is broken and they go down to the next level, you're going to see the same thing happen. Okay, where they start to accumulate contracts again. Okay? And you're going to get to another level again. And then you're going to have 2 points again. And here's your next level. Okay? And they typically do this 3 times. I have seen it do it maybe 4 or 5 times, depending on if they want to extend it higher or not. Okay, but just keep in mind that this is what constitutes the levels. Once they have the contracts, boom, they move down to the next level. You'll see the structure of that level be broken. When that structure is broken and a new low is created, then that's when you know you're at a different level. Okay, and we're going to look at this on a chart so you can see it. But I just want you to realize, I just want you to understand that the simple concept of behind levels and what creates a level. Okay, all it is, consolidation or collecting contracts, okay, between 2 specific points. All right, once they're done and they've collected enough contracts, they're going to move down to the next level, and boom, you'll see the same thing. They'll start moving sideways. Okay, so that is what constitutes a different level of changes. All right, let's look at it on an actual chart so you see what it's actually like. All right, guys, so here are some levels, okay, on a chart. All right, so, and I don't want you to worry about what level it is or anything like that. I just literally want you to see the level. That's it. I just want you to see the level, nothing else. All right, so don't worry about what level it is or anything like that. Just identify that there is a level there, because once you're able to just identify the fact that there is a level, then it'll train your eye to actually see the level. All right, so here's a do the quick and obvious levels, right? So here's a level right here. Okay, now what is this whole thing considered a level, right? It's not, like I said, it's not perfect, right? This is not like straight across, like moving straight across like this. This is not perfect, right? And that's okay. It's normal like that, all right? But the majority of the level you see is constrained between these 2 points here. Okay, so you see that between these 2 points, that's 95% of the level, right? When is the level broken? Look, it's broken right here. You see that? It's broken down and it went to another level. Okay, so this right here is another level. You see how price is moving between these 2 points. Okay, so price is moving between those 2 points. There's another level. Okay, when is the level broken? Right here, when it goes down to another level. All right, so here itself is another level. Okay, same thing. Price just moves back and forth between 2 areas. Okay, here's another level. All right, now why you might be asking yourself, why is this whole thing a level? Okay, the reason is because the initial points of the level where they were created here. So here's the high, here's the low. Okay, so that gives you the footprint for a level. It doesn't matter if it's like this. It doesn't matter. It doesn't have to be perfect up and down, up and down. Okay, the only thing that you are concerned with is it within that box? Is it within the box? That's like the only thing that you should be concerned about. Is it inside of the box? You have to create the barrier first. Okay, once you create the barrier, then you can help identify everything within inside of that barrier is a level. All right, now what constitutes the break of this level is obviously when price breaks the lowest point of the level. Okay, that's what constitutes going to the next level. All right, and as you can see here, guys, this isn't perfect, right? So you see how this breaks it, goes back up, breaks it again, comes back up again. This is what they do, guys, to get you. These are the moves right here. I mean, here's a plain W right here, right? This is what they do to get you to either buy or sell. This is accumulation right here on a smaller, this is on a daily, but if you look at it on an hour or 15-minute chart, this is what they do, you know, to get you to buy or sell. This is the fake moves that they do. But so understand the shading of the levels, guys. All right, it's just basically a standard point back and forth within a certain area. Okay, guys, so let's do a quick recap here. What's a level? A level is just an area where price is moving back and forth between two specific zones. Okay, so for example, price is moving. It moved all the way from here to here, and now it's moving sideways like this, right? This is a level. Okay, when is a new level created? Whenever price breaks that structure and moves down or up to another level. Okay, so here it broke that structure, came down, and now we've created a new level here. Okay, so this is a new level here. All right. It doesn't have to be perfect across like this. All right, so don't worry about that. All right, you just have to be able to identify when a new level is created. Okay, a new level is created when the previous level structure is broken. Okay, if the structure is here for this level, right, it's a new level is created once that structure is broken. Okay, I want you to keep this as simple as possible. Don't overcomplicate it. Don't over exaggerate it or anything like that. Just keep it simple. Okay, here's a level here, right? When is this level broken? As soon as this low gets taken out, that level's broken when we're going on to another level. Okay. So here's another level here. I mean, do you see what they're doing here? We're in the middle of a level right here. Okay, this level is not going to be broken. We're not moving on to the next level until it breaks out of this structure. All right, when that structure is broken, then a new level is going to be created. Okay, just understand that particular concept of it. All right, guys. So what is going to be an easy way for you or to help you identify what level you're on? Okay, you can do this a couple ways. All right, the first thing that I would do is I would do one of two things. Either switch to a Hikinachi candles, okay, or switch over to a line chart, okay. So there's a line chart. I like to use Hikinachi because it just makes everything, it feels like everything's so much smoother on that particular on that candle. Okay, so if we just start to break this down in a very simple form, okay, here's a level here, here's another level here, okay, here's another level here. You follow me? Okay, see how easy that was to identify? Okay, and if you're asking yourself, well, how is this a level when this price moved all the way back down and it moves back up? It's because, yes, this structure was broken, but price came right back into that shaded area, into that same structure, right? So these are just false moves for them to get you to sell prematurely. Okay, these are all things that they do to fake you out, to get you to get into the market, because they can't take your money if you're not trading. So they have to induce you to actually make a trade. Okay, if your money is not in the live market, then they can't take your money. All right. So they're going to do everything possible to show you what you want to see for you to put in a trade. Okay. Once you put in a trade, then they have you in the live market, and your money is available to them to be taken. All right. And so this is what this is. This is just a fake move, and it moves right back into the shaded area. And this, I think these little moves here, this is what confuses you guys, because you don't know what they're doing. And so what happens is that these little moves here confuse you, and you don't know what level you're on because of it. Okay. And so these are the things that they do to mess with your brain, so you don't understand what level they are on. Okay, but just understand that this is normal for them to do this. All right, so how to identify what level you're on the market maker cycle? Okay, the easiest way for you to start to identify what level you're on is you need to find either the peak formation high or the peak formation low and start counting from there. Okay, because that's going to be the easiest way for you to know exactly what level they're on, is to find the high or the low of when everything started. Okay, so for this example here, this started down here. Okay, so if we can count from the bottom, we can count this as level 1 and then this as level 2, right? And if we start to add in the stuff that we normally use, our EMA lines that we normally use, this should make a lot more sense, right? So what do we normally say would help us identify if we're on level 1? Okay, and that would be a cross of the 13 and the 50, right? So here's the cross of the 13 and 50, and then here's level 1. Keep in mind, guys, that when this crosses, price is already up here. Okay, so don't think that if this crosses, price is literally right here. It's not. When these two cross, price is already here at this level. Okay, so 1350 cross of the EMAs usually will give you level 1, and then a 50 EMA and a 200 cross, which is the white line here and the blue line here, okay, will give you, so this blue line here, this white line, this 50, 200 EMA cross right here will give you level 2. Okay, so that's when you know you're at level 2. And then level 3 typically is going to be a cross between either the 800, the 200, and the 50. So anytime that the 800 crosses either the 50 or the 200, or all of the EMAs are flat out, okay, you should be at a level 3. All right, or a peak formation high or low. All right, guys. So that is going to be an easy way for you to find what level you are on in the market. Okay, and if you go through this, okay, here's a quick and easy way to avoid getting into bad trades. Okay, if you go up to a chart, okay, and you can't find, let's say, a peak formation low, peak formation high for whatever reason, okay, or you can't identify what level you're on, even by using, let's say, the crosses or whatever. All right, if you can't identify what level you're on, then guess what? You're not trading that pair, because there is no way that you can trade a pair when you don't know what level you're on, because that takes away your disadvantage of knowing what level they're going to next. Because if you don't know if they're supposed to go up to level 3 next, then you're supposed to be a buyer. You're not supposed to be a seller in this market. Okay. Now, granted, the only time that you should ever counter trend, right, a trade, is on a level 2. You should never counter trend on a level 1, because it never works out. Okay. Level 2, there's going to be separation between these EMAs, okay, there's going to be levels, separation. There's going to be separation between the 50 and the 200 when you get to level 2. Okay, and that separation creates a trade, one trade setup that gets you back home, which is to the 200 EMA, which is this trade right here that you see. Okay, so at level 2 would be the only time that you can counter trend, because these EMAs, here are already spread out, and price has to come back home to the 200 EMA. Okay, because they have to collect money from this move here. All right, they have to collect money from moving up 2 levels. Okay, an easy way for them to do that is to just go back home to the 200 EMA, and that is a trade that you can take, but only on level 2. You don't do it on level 1, you do it on level 2. All right, so the only part that you counter trend trade is on level 2, not level 1. Please don't do it on level 1. You will lose on level 1. All right. So peak formation high is here. Okay. So we're going to start out from peak formation high right here. All right. So that's going to give us 1 level right here off the bat. Okay. So there's 1 level. Okay. Where's the next level going to be at? Okay. If you look, this moved down, came back up, moved down again. Came up, moved down again to that same area, moved down to the same area until it broke. Okay, so this right here, this whole area is a level. Okay, and I'm gonna Sharpie it up so you understand this whole thing right here. That is a level. Okay, that is 1 whole level. You see, price broke and came back down to another level here. So now what creates this level over here? All this is 1 level. You see how they do the fake move, push right back up into that same area, and move sideways. Okay, then they break the area here, come up, come back down, come up again, right? So all this is another level. And then here is where they do the reverse. But Jamark, how come there's more than 3 levels here? Understand, if you understand how market makers do this right here, this big W or big M, right, to shift from going up to going down, or from going down to going up. Okay, let me explain that process for you. Okay, so what happens is that you're at a level and you're accumulating contracts, right? And so what happens is they have to convince you, because think about it, the move that they're trying to make is going to be a huge move, right? That's instead of going down, they're trying to go up now. Okay? And they cannot do that until they have enough contracts selling so that they can take the opposite of the buy. So they can take the opposite of the sell to buy. Okay? So in order for them to do that, they have to make an aggressive move to get as many traders possible to sell. Okay? So they have to make an aggressive move down 25 to 50 pips further down to get you to sell. Once they have that first batch of contracts, then they go ahead and accumulate some, and then they hit it again. Okay, and most of the time they'll either go down to the same. They'll do one of three things. Okay, they'll either go right before it. Okay, they'll go right to it, or they'll pass it to get more contracts, to hit more contracts. And really, when we're talking about passing it, we're not talking about actual price going that far down. We're talking about the spread. Okay, so if you ever notice on your broker, you have these two lines. If you have it turned on, right, you have these two lines basically, and that's the space between these two lines is called the spread, right? And so you'll see the spread normally on a normal, boring day, right? The spread will be very close together. Okay, but whenever they want to get orders that are holding down here from breakout traders that are down here as sells, okay, what they'll do is price will be here, but they'll widen the spread to down here. So they'll start to get some of these sell contracts so that way they can buy. Okay? So just understand how they work the area like that. Okay? And that's what they do all the time. They do this all the time. All right? So price is going to come down. Okay? And then as soon as they have enough contracts, they move away from that area aggressively. Okay? They move away from that area aggressively. And that is what creates what seems to be like a fourth level. But it's really not. It's just part of the third level. But that's just the move that creates the double, the big M and the big W. Okay, typically you're going to see this M or the W take on multiple days, right? So you see how the first leg of the M here happened on the 27th, or I'm sorry, the 25th. And then the second leg of the M didn't happen until the 29th. You see that? Down here, the same thing. 14th, second leg happened the next day, right? So multi-session M or W is a very good indication of that you're at a peak form low or peak form high. So just be aware, guys, of what the levels are, okay? Just be aware of what creates the level. Yes, it's not going to be pretty, right? It's not going to be pretty always. No, it's not. You're going to have these weird things like this. These weird pushes down, comes right back up. You just need to know the concept that is part of one level. Okay? That's what constitutes one level. All right? So I hope that helps you. Number one, know the concept of what a level actually is. Okay? Number two, know when does a level move to the next level. All right? And then three, that yes, the level is going to be not so pretty all the time, because if it was perfectly all the time, everybody would be able to identify, everybody would be able to trade it. Right. So guys, I hope this video has helped you identify levels and also help you identify when a level changes to another one. I hope this video has brought value to you guys. Let me know in the comments what you thought about the video. Let me know if it clears up a lot of the stuff for you when it comes to levels. If not, give me some very specific thing, guys, in the comments that I could help you with. If not, guys, thank you so much. Make sure go to fxntrading.com, guys. Get a free membership. If you need mentoring, guys, I've opened up 10 more spots available for mentoring. So if you need mentoring, definitely sign up for that on fxntrading.com. Again, thank you guys so much for your time. I appreciate it. Have a good one. Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntrading.com. Once again, guys, thank you so much. I'm truly blessed.